Hello everyone, Coach Jay here. In this episode, we're going to talk about support and resistance. So what is support and resistance and how is it used? Support and resistance can be thought of as a floor, which is called support, and a ceiling, which is called resistance. When you draw your lines connecting the bottoms and tops of stock's price range for a time period, let's say for 6 month, 4 hour, you may see it's consistently bouncing off its support and going back up, or bouncing off its resistance and going back down. This identification of support and resistance is a critical piece of any trade, as you can see when it may change direction, and with analyzing and strategizing, you can monetize when it does. You would also see when it breaks above or below its support and resistance, which would indicate a continued pattern either downward or upward. A key piece to keep in mind is that if a stock is trending up and breaks through its resistance or ceiling, that the line of resistance it broke above now gets renamed support. This is where the phrase you'll often hear, old resistance now becomes new support, comes from. On the same note, if a stock is trending down and breaks through or goes below its support and then trends up, hits support, and bounces further down, the old support line becomes new resistance. So let's look at an example here. Looking at the 6 month, 4 hour time chart, sometimes when we connect support or bottoms of the stock price and you connect the tops of the stock price or resistance and the lines are horizontal, this means the stock is moving in a channel and you can analyze, strategize, and monetize when it repeats its bounce off support to then ascends to its resistance if it's going long, or shorting when it hits its resistance and it's going to its support. This works the same on a 1 day, 1 minute chart as well. So drawing your lines can provide you very easy analysis to see if a stock is making higher highs and higher lows, which means it's trending up, or lower highs and lower lows, which means it's trending down. So the stock price above an ascending support line would favor a long position, and a stock price below a descending resistance line would favor a short position. Another example is a bounce off the middle VWAP from above the middle VWAP would favor a long position, and a bounce off the middle VWAP from below the middle VWAP would favor a short position. So to put simply, when a stock bounces off its support or resistance lines in either direction, it's confirming either support or a floor, or resistance or a ceiling, and typically when a bounce off one of these occurs, trades are commonly made directly above the support line if you're going long with a stop loss a few cents below the support line, or trades made below the resistance line with a stop loss a few cents above the resistance line if you're shorting. Analyzing support and resistance of a stock is a critical piece in understanding how a stock's direction is changing, and based on other indicators such as its RSI and its EMA, SMA, and whole moving average, which we discussed in other videos. So once you have confirmed the bounce off the support or resistance lines, this would be an added analysis piece with the review of your stock indicators to then strategize your long or short, buy or sell of the stock you're looking at. Well, that concludes this episode of discussing support and resistance. We hope you join us in the next episode. We'll discuss additional tools you can use as guides in your analysis to confirm direction to then strategize your trade of a buy or sell. Thanks for joining us, and as always, let's try every day to do something great. Take care, everyone.